a special guest who doesn't usually get out there and do interviews. I've looked at MC's work at macro charts for years now, and he's one of the more respected people out there in FinTwit. And MC, thank you very much for granting this interview on a real interesting day.
Thank you very much for having me, Dale. Great to
Okay,
be
so
here.
yeah, so why don't we start with WTI? You know, when I liked it down here, MC, actually, I bought the crash low at 56 in early April, and this had to be the most patient I've ever been because, I rode it up here. I didn't take partials, my mistake. And then we had a retest, but didn't take out the lows. So, I've been talking about this potential with everyone saying to me for the last 6 months, Dale, it's going to 40. There's no one loved it. Very unloved market. Uh, we actually achieved, I had this trend line in for about 5 months. What I've seen in the past sometimes, MC, like
Mm.
in Desert Storm, is markets will rally into the event and then peak on the event. Do you think that what we're seeing up here in WTI um, might be the end of it, or we could have a continuation move to the upside?
That's a great question, and obviously, oil is the classic commodity that exhibits the behavior you just talked about. What I'm seeing from my end of things is, well, first of all, big picture. This is a downtrend. I don't want to get too uh, short-term focused, but oil's been in a down. I've been negative on oil for well over a year now, and uh, at the same time, when it breaks down from key support areas and signals a continuation of decline, I haven't really been super bearish either. And the setup definitely was there for a minor extension, in my view, at the time when we were trading in the low 60s. I think when we crossed through
Yeah, the support
61,
level
62. Yeah, when we started pushing through 61, 62 around
is right
early
here,
June,
right here.
I would say, yeah, I thought, yeah, this could probably extend to 67, 69. That was my range. Um, Even up to yesterday, I thought, yeah, we could probably get to 69-ish again today. And then we got the blowout. And so this move now, to me, reads very much like a classic blow-off. Yes, it's geopolitical. Yes, there's weekend risk. There's going to be some intraday residual volatility. Nobody wants to sell oil tonight. Nobody wants
Yeah.
to, right? But that's really what happens at exhaustion moves. I think it's very difficult to justify this continuing just based on, again, I'm not qualifying. This is not a geopolitical conversation. I'm not a geopolitical expert. I have
Well, it's
spent
a
a lot of today.
geopolitical move.
It is, and I've
Okay.
spent a good portion of the day, just listening to rational folks like John Kemp, guy I really respect in the oil space. A couple other guys that we pay for research. Just trying to put together the odds of this escalating, and if so, how bad it could get. And just yes, things can always get worse, but I think we're near some kind of an exhaustion point. And more importantly, I think from a chart perspective, we're starting to see early evidence from basic indicators all the way to pretty fancy indicators, but even basic indicators like RSI, we're starting to see early evidence of topping behavior that we really have seen consistently throughout the last 3, 4 years.
Okay.
And
I
I
wanted
don't
to
have
ask
any
you
reason to
about
believe this is
this.
different. Mhm.
I think some of the best trades are when you have breakdowns that turn out to be false breakdowns, same with breakouts. And
I
this was
agree.
pretty classic, right? And once we closed, this was Friday or Monday of last week when we had a pretty clear-cut breakout. There were several attempts for oil to break out over this level, but it didn't happen until here, which was this candle right here. Um, the date,
100%.
yeah. So um, I look for these types of things, and I think that we could have some exhaustion here, but I still think that when I look at RSI readings up here, markets rarely peak when momentum is confirming the move, and momentum is dead. There's no divergences here.
That's
Um,
true.
so, I think at least they'll have to go through a distribution phase.
Yeah, and
Breaks will
typically
be
the
bought.
yeah, and typically, we've had situations where oil would top. If you give me these conditions that we're seeing today in oil, historically, what's the expectation for return? It's anywhere between 1 and 3 days. So you could have some minor distribution over the course of next week, maybe even into Monday with some residual panic over weekend news. But yeah, we're in the vicinity. So now's the time really to be paying attention to intraday signals.
Okay, do you see a short setting up next week in WTI?
I would like to, yes. I
Okay.
think we're getting close to that.
All right, let's move on to something else because I saw on your feed you're talking about certain inflection points, and I gather from what I read is that you're looking for some type of bottom in the dollar. I'm not sure this is it, but I did cover, and the main reason is the RSI confirmed, but I did cover dollar uh, euro longs yesterday and took a piece on the long side of the dollar. Tell us your view if you think that we have to go through more accumulation, if you have lower targets for a bottom. And was I reading you right that you think a dollar low is coming? And also, last part of it, is it because of the extreme positioning of bearishness towards the dollar, and it's going to not be the reserve currency later this afternoon?
I love it. Oh
Huh?
my God. I wish everyone in the world heard that question because this theme of the end of the US exceptionalism is just
Yeah.
such nonsense at this. I mean, really. But let's not get into that. Let's
All right.
focus on the dollar.
All right.
Um, so to your point, I've been tracking the dollar for a potential bottoming structure uh, since pretty much April when the dollar made the first bottom.
Okay.
And at the time, I was making the case for a few weeks of bottoming action, maybe an initial bounce, which we got. Revisit the lows, maybe higher low. We'll have to see the character of that. I think we're in that now. Overall, we've been like 7 weeks in this structure. I think it's
Glaring divergences. Glaring.
absolutely starting to build 100%. That's what I was talking about. I think the last really since April, I said, look, watch for the bounce. We'll get a squeeze. We got the squeeze. Still a downtrend. Go back to the lows. We're doing that now, and now we're starting to see the
Yeah.
divergences pick up.
Yeah.
Bullishness has completely collapsed. I mean,
Yeah.
in some ways, sentiment and positioning are lower now than they were in April, even though some dollar pairs are at higher lows,
Yeah.
some are at lower lows. And so we're seeing, it doesn't have to be a V-shaped turn here, but this is classic double bottom. And the narrative, I think, is completely exhausted. And so, what's the catalyst for a turn in the dollar? There's a number of things out there. To me, it's just the fact that, if you look at, first of
Yields.
all, what do you buy? What do you buy with the dollar? Right. Exactly. Like, so what do you buy when you go into the dollar? What do you buy? You buy stocks and buy bonds, right? So,
Yeah.
at some point, you're within a 1%, 2% of the highs in U.S. equities. At some point you start making new highs on the indexes, and you look around the world. You look at Europe, you look at China. There's a lot of relative weakness starting to come up in the international markets. This is without even looking at the currency component. And so these international markets are full of money. The last buyer is bought, so to speak, and relative momentum has peaked way long ago now, several weeks. Um, and so what happens is you start pushing to new highs in U.S. technology, large cap growth. Well, you start having buyers chase because that's just what happens historically when the U.S. equities make new highs. Everybody that sold the April low and thought we are going to go into a bear market now is to chase higher, and there's a lot of money on the sidelines still.
Yeah.
So I would just
So,
add
so the bull
that
case for equities is support of the dollar because you know what we did
pretty
have
much.
we had a regime change. Okay, everyone before this year said weaker dollar risk on, right? So they were all flat-footed during this decline. The dollar's coming down. Why isn't the market running? Instead, it was fund flows away from the dollar into the DAX and international markets. So you think that could be ending that outperformance of international markets? And actually, a weak dollar is risk off, and if people come back to the dollar, that can actually support a bull move in equities and bonds.
I think you're 100% right.
Okay,
And
I
there's a lot
understand
of
now.
charts we do. There's a lot of chart work we do on relative momentum between US and international markets and also US sectors versus international sectors. A lot of stuff we do behind the scenes and a lot of stuff we publish on that. And it's definitely supportive, not just on a daily, but also weekly time frame. Momentum's pretty much dead in Europe. You
Okay,
had the leading stocks are pretty much gone. A lot of the indexes have failed to make new highs. Some have, some haven't. You have bearish divergences building there. Meanwhile, you have, all of the key cyclical and high momentum, high beta sectors in the US, like within a blink of new highs. So I think it's
right.
just a matter of time for the narrative to begin shifting again and people getting, wrong-footed.
Okay, so we looking for a base, a dollar rally, which supports higher prices in stocks. Why don't we go to yields then? Because everyone is pretty confused. To me, it looks like they just can't break the 10-year, and that we could even end up challenging this 475, and then TLT actually had a confirmed low down here on the daily, and this was Moody's, and sell the rumor, buy the fact. But I'm not impressed with bond market action, and I think new lows are coming in TLT that might set up a buy. I think the dollar's a little ahead of the bonds, maybe, but
Mm,
I still think there's a shot for higher yields here.
I think so
Where
too.
you okay? Do you think that the 10-year is going to take out that 475?
Yeah,
Because
I
we
think we could see range highs 480.
480.
Yeah.
Okay,
Could get there. I mean, the 30 years already
yeah,
well on track. I mean, if you look at just looking at the curve in
yeah,
general,
the
twos,
steepening.
five, tens, 30s. I mean, the 30s are way higher in the structure than the tens, and they just look like they broke out above the five range, 510, pulled back into that range again. Now potentially rolling up to new highs, 520 plus. I mean, that's just going to drag the tens probably up into the top of the range around the 480 in my view. Um, that's needless to say, right? In a if that's the case here, we're looking at 50 basis points higher, or well, let's just say roughly, but more importantly, a multi-week turn. You want to be long dollar yen. You want to be long dollar Swissy, right? Yields up, dollar up,
Yeah,
particularly against the risk-off currencies, against the defensive pairs. This is really shaping up to be a yields higher and a return of dollar exceptionalism rather than the consensus narrative, which I think has got it pretty wrong at this point, or at
you
least
know,
is vulnerable.
yeah, I read from Danny Diane, who likes the yen, that the yen, U.S. dollar yen, is way mispriced compared to, the correlation may have broken down between yields and the yen for a while, but just based upon where the 10-year is at, it should be much higher. Do you
Yeah, I
agree with
agree.
that assessment?
I agree. There's been a lot of yen buying, and the position is now pretty stale. There's a
Yeah,
lot of yen longs out there. I think, and on the well, basically on the premise that the Japanese bond yield is going up, you want to be
yeah,
long yen because you want to get the whatever. That's going to
yeah,
be pretty challenged. That's going to be easily challenged if you get bond yields in the U.S. starting to grind higher,
okay,
and but without a recession, right? And so
yeah,
the U.S. can support that near term, and that's dollar bullish in my view.
okay. That's interesting, and contrarian. Another one, right? I mean, everyone's looking for 140 to be taken out. It's obvious. I'm sure you've looked at this weekly MC where 140 is like kind of the line.
Huge level.
Yeah, yeah, that demarcation line. Maybe we just take it out to clean out all the stops. But
That's what
uh,
I was thinking for a few weeks now, just to tick down to 139, 138. But
yeah,
after this week, even the last few
yeah,
days,
I
and I
agree.
had buys there, I'm ready, willing, and able to get aggressively long the dollar if I see the right prices in certain pairs, right? But
Yeah,
look at the action tonight. I mean, we have
yeah,
escalating geopolitics, and dollar yen can't even print like a 1 week low today or yesterday, right?
yeah.
So there's something to be said here that dollar sellers are exhausted in these pairs. This is
Okay,
not a risk off environment. This is, I think the momentum is anticipating something bigger coming. And this geopolitical last 48 hours is just a big distraction to the macro, which is shifting higher in the dollar.
okay. Do you ascribe to the milkshake theory? Do you know what it is?
Yeah, yeah, it's Santiago, my
Brent?
buddy.
Yeah, yeah. Okay.
I think he's on point. He's a big thinker. He has a long-term view. He's been proven right many times.
Yes, he has.
Um, and every time that, it's funny because every time people say the dollar's down and out,
Yeah,
it's the time to be subscribing to that view of the world, in my opinion.
yeah.
And we're certainly in that moment.
Okay. All right. So, we've covered a lot here so far. Uh, do you believe that, I read some of your stuff and this whole
Mhm.
rally from the low, which was a test of the breakout from a few years ago, uh,
Yep.
this was bought by retail, right?
Yep.
And funds left out, and you're saying that there's a lot of selling on the rally in ETFs, ETF
Yep.
owners, fund managers way underweight stock. So, uh, are they tough enough to engineer some type of retracement of this rally here, MC? Maybe 5,700, 56, something like that, to buy stocks at better levels, or are they just going to continue to have to squeeze and say instead of GMO, GMI, get me in at any price?
It's a mix of both. I'm working with some pretty specific scenarios in the next, I would say, over the summer and into the third quarter, just based on historical parallels that we've seen in rallies that exhibit behavior completely, pessimistic and just sort of entrenched negativity, which we still see in this rally. Yes, we see some early signs of speculation, some early signs of traders embracing risk and bidding up some more aggressive high beta stocks, et cetera, and lower quality names. But overall, yes, there's a substantial amount of institutional money that has been locked out of this rally. And look, I'm not one. I'm definitely not one to gloat, but I am proud of the work we've done, since April. Not just saying, hey, this could be a bottom, or just let's look up, let's look higher here, but in the face of which is anybody can do, anybody can be lucky and buy a bottom in stocks, but the work that we've done since is just staying with the trend every, week in, week out, just saying, look, these are the stocks that are leading. Check, have a look at these names. And then the next week, adding more scans and saying, listen, the direction's still higher here. You just give it the benefit of the doubt. There's still room for this. This is the behavior that's missing. And week in and week out, having that discipline to stay with the trend, focusing on the things that matter. This is what we've done, I think,
Okay.
extremely well. Proud of the work we've done. And
Well,
and to say we're, and that's to sort of just to set the table for where I think we are. I think there's some pretty important components that are still missing in this rally to get us to a more substantial top. And by that I mean a moment where I would say the indexes are vulnerable to like a 10 or more percent correction. Maybe I think it's difficult to even say that we're in a moment where we could be down 7 to 9 or like a high single digits here. I think we're going to continue trading in an environment for now. And the short term for me is like 30 days or so.
not if we
I think
take out
for,
5920.
well, that's always possible, right? And if this escalates with in the Middle East and all that, that's
Well,
always
I,
possible.
I'm just
But
saying it's an important level.
no, absolutely. I mean, but there are levels that I would say we would have to take out and turn momentum, various indicators of momentum that I'm looking at, to sort of open up the kind of downside risk that we saw, back
Oh,
off the top, off the
yeah,
high in November, sorry, in January, February.
yeah.
And I would
That's
say
not
more
happening.
specifically, I would say even more specifically, we are still missing, the divergences that are necessary, plus the sentiment burst, plus the speculative activity, and some of the more extreme signals that we at least watch for signs that stocks are vulnerable to like a more significant correction. Again, something like 10-15% or more.
Okay.
Right now I'm still operating, and I've been operating this way for several weeks now. Back when the indexes were still below the 200-day moving average and then popped through it and then even retested it from above. That throughout that entire sequence, when everybody's looking for a failure and a retest of the lows, we said, no, no, this is likely to keep grinding. The conditions are in place. The leading stocks are still leading. These are the names. Focus on these areas. And everything that we've been saying since then really pretty much remains the case. So that could change in a week. We have to stay flexible, but just generally from historical patterns, I think we have a few weeks ahead of us still.
Yeah.
And summer's notorious for low volatility grind up. So, I still have to stay open-minded that this probably resolves itself, this geopolitical thing we're going through right now. And the market looks ahead of that and continues grinding. Just because, again, like you said, there's a lot of institutional money left out of this.
Yeah. Well, I'm still looking for 5,700 under 920
Mhm.
measures that, and then it's like 38% correction, fills a
Mhm.
gap, shakes the trees to get out some weak hands. And I know you talk about momentum, uh, just looking under the hood of things,
Mhm.
Apple still looks lousy.
Yeah, absolutely. It's the one Mag 7 that really stands out
I don't know.
and could be rolling over.
Amazon looks like a retrace that could pull back to 91. The champion has been Netflix, and it had a throwover and looked a little bit vulnerable to me.
Yeah, that
Uh,
one's definitely extended.
okay. Uh,
I mean, we were
Nvidia.
buying that. I think we were buying that Netflix as it broke through 960, 970 around the
Okay.
second or third week of April.
There's pretty good divergence on Nvidia on the 4 hour. I don't know about the daily, but why can't we see 120 again? 132 again. Anyway, I'm just saying I maybe I'm
Yeah,
talking my book.
yeah, look, these are definitely possible.
Yeah,
A deeper pullback on Nvidia to 120 would be almost like I think it's like a 50 retrace of the rally, a little bit less than that. I
yeah,
mean,
less. Yeah.
that would take probably most of this, maybe a few weeks to get there, maybe most of the
Right.
summer. That would definitely be like okay,
Back up
corrective
the
pullback is
truck.
beginning now. Yeah, I mean, look, that's the scenario where like corrective pullback is beginning now, and then
Yeah.
we roll up to new highs.
Yeah.
That's sort of been our, it's been several weeks now where our sort of alternate scenario was like a 5% pullback on the S&P. I still think that's like the alternate scenario. My base case is like we're going to see 1, 2 day, 3 day dips,
That's it.
and we keep grinding until a bigger top. And then at that point, everybody's in, everybody's looking higher, 7K, whatever. And, speculation is really off the rails.
Yeah.
But again, maybe this is the catalyst to start cooling the jets here with the geopolitical, and then whatever transitions into some other negative news in the next couple of weeks that keeps pulling things lower. I'm open to that.
Yeah. Higher yields. Bonds having another few bad days. You think the Fed's going to move?
I don't. I think the
Okay.
Fed's way behind. One
Okay.
of the guys I really like, Neil Dutta um, Renaissance. I'll have to send you the link on the DMs on Twitter. But
Okay.
Dutta was chief economist. He had like a 10-minute interview with Bloomberg TV. I think it was a couple days ago, where he makes a pretty solid. He's been making this pretty solid case really since the beginning of the year that housing's on a downward trajectory, uh, labor market's cooling, um, and eventually the Fed can't keep saying at every Fed meeting that the economy's solid and labor is cooling, because in the words of
because
Neil
it's
Dutta,
not.
that's
Yeah.
that's not how temperature works. You can't have something that's solid and cooling at the same time. So
How
I thought
about
that was pretty
how
clever. It gives a
about an
smart guy.
iceberg? An iceberg.
Yeah, exactly. I mean, look, there's a lot of reasons why to think that if yields do push higher here, I think they'll probably cause some damage to the
Yeah.
outlook for the economy in the next 3 to 6 months.
Yeah.
And it's already, I mean, look, continuing jobless claims are at a high, um, are at trend high. So, and that's what one of the things Neil was saying. There's a
Okay.
lot of evidence for broad-based cooling in the economy.
Okay. Well, why don't we wrap it with this? Okay, MC, I've been reading stories about gold and silver, and I have 50 grand I want to allocate. Do I buy gold here?
What's your time frame? What's your profile? How
Uh,
close are you to retirement?
risk
Do you have a
profile.
financial advisor?
To me, what I used to have people do that I ask those questions too, but I would take it maybe a little further and say, imagine you're striking a match and lighting up that check. And if that makes you nervous, it's not risk capital.
Yeah, I think if you want to play it for, if you're a short-term trader and you know exactly what you're doing, you can play for a move higher. But
Yeah.
I thought that 2 weeks ago, and now today with the geopolitical spike, I'm not
Yeah.
really too excited in chasing it.
How
There's
about
better setups out
silver?
there.
How about silver? A lot of people talking about the gold silver ratio
Yeah,
flipping.
I liked the breakout. I bought some into that breakout through 35, and we could still pull back to that. If we do, I'd like to see how that holds, and if it can sort of find support for
Yeah.
for the next real big extension. It's not necessary though. It may have been the real breakout, and we're not going to see those levels again. But then again, I look at platinum.
Yeah.
Platinum got really, platinum was dead for years,
Yep.
while gold and silver, gold was doing great. The last two
Right.
years, platinum doing nothing. And then all of a sudden you get this huge move. RSI got super extended, and I think platinum's almost back to the prior high from 3 years, 4 years ago.
Yeah.
So I'd say, there's probably some cooling off to be done here in the whole group. Maybe not immediately, but once this geopolitical sort of calms down, I would say there may be some cooling off to do, but silver's, I think it's trading more like a risk on here
Yeah.
than obviously gold is spiking today. Silver's not doing much. Silver broke out, and gold wasn't doing anything as silver extended out of the range. So I'm more inclined to think that if we go into sort of a speculative blow off in stocks and just generally risk assets, Bitcoin, what have you, I think silver tends to benefit far more in that scenario.
I look at the weeklies not confirming here, and I have this megaphone drawn here, MC. Give
Hmm.
me a narrative, and I think maybe a huge dollar rally, because gold could rally with a dollar rally. I've seen it many times. But I
Hmm.
do believe that silver needs a bear market in the dollar to
Yeah, yeah.
perform. Give me a narrative that would take it back to 26.
Well, I mean, initially, if the
Put
dollar's still bottoming, right, and just sort of still finding its legs,
right.
which is my base case, like the dollar's not ready for a 10% rally here in the next 3, 4 months. It has to finish the base, it has to build momentum, it has to
Okay.
get tight, blah, blah, blah. And so eventually when the dollar's in your quote unquote wave three or your core advance, okay, then nothing's going to really hold up, especially in the precious metal space. But between now and then, there's still residual flows that could push silver to that resistance level that
Yeah.
you
It,
pointed out, and then
yeah, it could
eventually the
go up
last
here.
buyer has bought. Yeah,
Yeah.
then the last buyer gets sucked in, and then you pull the rug. Come back right into the range. Just like the last breakout failed and went right
Right.
back into the range. So you
Right.
you could get low 30s, high 20s, and back to those moving averages that you have there highlighted.
Okay.
No big deal, especially if the dollar is finally ready for a. I mean, look, to come out of a bottom like this, if the dollar is truly bottoming, to come out of a bottom like this and then fulfill sort of like the historical expectation, the dollar would probably have to rally for several months, maybe even the rest of the year.
Yeah.
So That's enough to cause quite a bit of damage for silver and gold.
Yeah.
And we've seen many years, I would say, 2016 comes to mind, but some other years come to mind as well, where precious metals did well sort of the first half of the year, and then they just sort of get absolutely taken out and sell off until November,
I,
December,
yeah.
and then sort of find a seasonal bottom there when nobody really wants them anymore. So I wouldn't be surprised if that were to happen again.
Okay. MC has a Substack letter out there. Here's just, here's all his calls he has here. Some great macro calls. I guess that's how he came up with his handle. And he's got the experience, all kinds of real nice testimonials. So check it out. I like your demeanor, MC. You're a calm guy, and
You too. Thanks, Dale.
it's you're a veteran, and it's great to meet you and have a talk and exchange ideas. Maybe we could do it again down the road, and I hope you and all your subscribers have a great harvest come this fall.
Thanks a lot. And I hope you have a great rest of your day and Friday and weekend, and have a great summer. And definitely let's look back in a few months and see how all this played out. Maybe we'll be looking back at some pretty important inflection points in these markets.
Okay, everyone, this is also recorded, so you could watch it again if you want to. And remember, most of all, don't just count your pips, count your blessings, and have a great weekend. Do your work over the weekend so you're ready to execute instead of trading on the fly. Thank you, MC. It was an honor
Thanks a lot,
meeting
Dale.
you. All right, buddy.
Likewise, take
You're
care.
now my trading warrior brother for life. You can't get out of it.
You got it.
All
Look
right,
forward
it's
to
like
it.
Hotel California. And the mafia, well, you can't leave. You could try, you can't. So that's a wrap, everyone. Have a great weekend and see everyone on Monday.